Okay, guys, a very warm welcome to everyone. Now, thank you for joining me and the rest of the team, the rest of the group as well on a Sunday. Now, today is the 23rd of May. It marks the first Sunday session that we will actually be doing every Sunday from now. So it's going to be, hi, good morning, good afternoon, Mr. Alfred. How are you doing? All right, good. So it's good to see quite a number of people in Malaysia itself, from Penang, from Kuching, from KL, from various other places. That's nice. And people from around the world as well, from Nigeria, from all over the places. We are expecting another group actually from the oil and gas industry, specifically from Scotland. We've got quite a big group of Asians, especially Malaysians, working in Aberdeen in Scotland. So I used to work in Aberdeen, Scotland before in the oil and gas industry for a couple of years. So I've been involved in that sector for a few years, which basically was my first time getting into the Forex industry. So I bumped into people who were trading Forex in the oil and gas industry. That's how I became interested. And now I am hand and feet and head and everything deep into the Forex industry trading, as you guys know me. So yeah, it's going to be a very interesting networking event as well for you guys. But the primary objective of this webinar is to actually introduce the trading opportunities that one can actually get from trading oil, gas, commodities, and all that. Because of my speciality in some areas on geopolitics, I see that it could actually be beneficial for you guys who are would like to actually trade oil, especially gold, silver, copper as well, whichever that are available on the MT4 platform. Now, I will be using bkfx.io because I know them very well. I'm involved as one of the directors of bkfx.io as well, especially on the educational side of it, with Bretton collaborating with BKFX on a very big scale, because at the moment, Bretton Financial Trading Academy is basically, I'm the co-founder of Bretton, and with Bretton, I have collaborated with, I need a very reliable broker, especially to deal with my really big clients, especially. We've got investors who are individuals like yourself, but then they are pumping in very big money, you know, $1 million, $500,000, and a few $100,000 to start off with. And they are basically swing traders. So they like to just leave it, the trading accounts on the MT4 to actually, you know, swing trade whatever they are already trading as well physically. So this is what I want to make a very big difference between trading MT4 and trading your actual stocks, or trading actual gold, trading anything that is from the stocks exchange. Is very different from trading on CFD. So what you are doing is being guided by me to actually help you trade CFDs, whether it's oil, gas, gold. You are trading on CFDs. So that could actually be a diversification of portfolio if you are already trading on the Bursa Saham in KL, I mean in Malaysia, for example, KLIA, or any other stock exchanges in Africa and all that. Direct stock trading, if you're already directly stock trading, let's say the US 100 top companies, you may be able to find most of them on the BKFX platform as well, but they are called indices, and they are basically, you are trading on CFD. So what you're actually doing is you're just speculating the price. So you're not owning any shares. So if you look into the BKFX platform, and then you have got all the Alibaba, Amazon, Apple, all the top what do you call that, stocks, for example, and also you're looking at oil, gas, you're looking at copper as well, precious metal, and various other things that is classified, categorized under commodities. We've also got stocks. These are all trading on CFDs. You've got your US 30, US 100, US 500, which is the S&P 500 as well, HK 50. So a lot of people in Malaysia, Africa, Indonesia, everywhere in the world, they're very familiar with trading from the stock exchange exchange side of it. Now, I find that to be very interesting because I was once into that as well, into the actual stocks and all that. And I've learned technical analysis, geopolitical analysis, and all that based on actual stocks. Then I have stopped all the actual stocks and I started trading onto the MT4 platform. Now, I find that trading onto the MT4 platform could actually boost your earnings much more as well, because you are able to trade both ways. So I'm not saying stop all the trading on stocks and everything else. No, keep that going. Of course, you cannot stop that. And basically have whatever you are trading on the MT4 platform, guided by myself with Kunan and all that, is to actually diversify your portfolio and actually increase your earnings. All right. So, and it also will help you understand how you are going to be trading your actual stocks as well. So whatever analysis that I am helping you, whether it's fundamental geopolitical analysis, as well as technical analysis with the patterns, with everything that I teach, are applicable onto your actual stocks trading as well. So maybe you will be able to advise your remisers as well, because this is what I get from my fellow friends from all over the world, especially in Malaysia as well, who are trading very heavily the actual stocks in the KLSE. I mentioned KLIA, that's the airport. Sorry, that's the wrong one. So it's KLSE. So they are also, you know, sometimes getting information from me, and then they go back to their remisers and they say, hey, you know, I think I want to look into these stocks and all that. And then they come up with more research as well, because sometimes these remisers, they may have a very different approach. It's very long term as well. But then as a trader and as an investor, if you are already trading stocks and all that, you can actually earn much more regularly on both markets, whether it's up market or down market, in on your MT4, on your trading CFDs on your MT4. Let's say you're trading with BKFX. Now, and this is basically why I am really keen in running this webinar as well for you guys, because the opportunity has come with a lot of geopolitical scenario. We've expected that coming, but then it sooner than expected. So I want to talk a lot about oil, especially. We will talk about gold as well, silver, and various other things that you guys want to talk about. Also, we need to consider correlated pairs like the Canadian crosses as well when we talk about oil. And then when we are looking into gold prices, we want to talk a lot about what goes on in the United States, especially with their political situation, economical situation, inflation, bank rates, a lot of things. So I want to point out to the direction and then look at technically where we can actually trade. So it'll be a very interesting Sunday session for you guys, and I hope it will be well worth for you guys to spend the Sunday 1 or 2 hours with me to actually plan for the whole week to actually trade commodities, especially. So it would be oil specific, interest into oil and gas, oil especially, because this is the time for oil, and I will tell you why it's a time for oil as well, with a lot of volatility expected, with some geopolitical factoring. Okay, and yeah, that's basically it. Now, before we go further, I'll just introduce a little bit about Bretton. Okay, so the website is bretton.institute. We are still in the midst of having bretton.academy sorted and setting up. So bretton.institute is a website. I co-founded this website, but it's mainly my style of trading, my method of analyzing the market. And what it has been is just basically to have a home again for most of my followers and traders. Communities now under FX Geometry has actually reached almost 100,000 worldwide. So we've got 100,000 members and followers. I have personally trained about 3,000 out of that 100,000. So it's nothing actually. Who I have met face to face, it's only about 3,000 plus, and that's over the course of I think about 7, 8 years only. So I am expecting to have more travels. We are in the midst of planning merchandise, t-shirts and caps and all that for Bretton Institute members like you. All of you are eligible for it, of course. And I want to be visiting a few other countries to actually set up Bretton Institute Training Center, actual training center. So the good news as well is that as of 2 weeks ago, I have been licensed by ATI. ATI stands for Academy of Traders and Investors in London. So they are associated with very, very big actual investors and traders, especially in the New York Stock Exchange. So one of the founders of ATI is, if you want to go to ATI website, it's just ati.london. Okay, so it is a certifying body actually. Now it's been founded by a very popular equities trader, actual multi-millionaire. His name is John Conti. So I've been put in touch to him, actually introduced to him by a ex-boss of mine in Naga when I was working in Naga. So the ex-boss of mine, his name is Stavros. He was the one who initiated that whole connection with me and Mr. John Conti. And Mr. John Conti basically does not know so much about the education side of things. So he has left me to run it as best as I can. So he connected to all the certifying body in the UK, especially in London. And that's how it has been born. So he had already all these certification capabilities. So he just needs somebody to help him run it. And now it's good news as well that all the certification that I come up with, for example, the geometric patterns certification, geometric trading method certification. There are two different things, by the way, yeah, just to let you guys know. They are all going to be internationally recognized, accredited and certified by ATI. So you will have the ATI logo there. ATI is associated with all other bigger recognizing bodies in the whole of UK, especially in London. Okay, so that means that if you have anyone or even yourself interested in having a certified training, I'll come up with different topics as well, not only geometric ones, investment ones, commodity. We can do a master class in commodity trading as well. And all of the certification that I come up with will be internationally recognized. So even your children or anybody else, especially the young ones, could actually have these training from myself. You guys can actually join in as well if you guys want to, and pick the certification that you want and put it onto your CV. So it's quite important because I'm affiliated as a visiting professor for various universities now, especially in Europe as well, and in Italy, in Holland, and various other places. So I'm responsible in looking at all the international finance modules and courses as well. So I don't want to talk about it too much, but I find that most of the courses are too theoretical, especially in Malaysia as well. The ones in Singapore are actually one of the best, especially in the Singapore University and all that. I was studying there as well. When I studied there in college years, then I went to Scotland to study. I had so many exemptions. So that is a sign that it's quite good in bridging the gap between theory and practice. I find that the courses in universities in Malaysia, especially even in Europe, not only Malaysia, in Europe, especially in Italy and all that, are too theoretical and they charge too much money. And then the students graduate, whether it's master's or degree, and then they go out in the open without knowing a lot of things, actually the practical stuff, especially like technical analysis and all that. So I introduced technical analysis and all that to various universities now. So yeah, I want to be getting to meet you guys in face-to-face, but most importantly, we want to start with you guys joining as a member in Bretton Financial Trading Academy. It's a very cheap subscription. We'll have that launch very soon. I know I've been saying that quite a number of times, but I think it's very close to finalization. It's just me having a very busy schedule to actually produce all these materials and videos. I've got about 200, 300 videos to produce for various other clients as well, especially brokers, a month. So that's hence the reason I was being caught up. But we will be launching the Bretton Financial Trading Institute membership. So it's only $10.99, but I want to explain a little bit about this. In the $10.99 membership, you will be able to join me in my webinars 3 times minimum per week, but we'll have more webinars customized to your needs as well, like the one that we are doing right now. And that $10.99 will include a course as well of the geometric pattern side of it, not the geometric trading method, because the geometric trading method is your level 2 actually in the ATI. So whatever that you do when you join the membership and you learn self-paced with my videos and everything else on geometric patterns trading, you will be automatically considered to be eligible for the certification. So then you go on to the certification, but this has to be a prerequisite. Okay, so this is your first level, just so that you are familiarized with how the patterns work. And then when you go to the certification, I'll basically teach you and share the entire price trade plan that we trade on. Okay, now, okay. Yes, we've got, I'm just looking at the agenda. Yeah, brilliant. Good. Thank you, Mr. Kundan. So yeah, so this is basically it, but we will go straight into the analyzing of the market for next week, especially with oil and all that, because as I've mentioned, we've got a lot to talk about, but they are forecasting type thing, research materials that I come up with and what has appeared in the news, and then giving you some entries, exits, trading opportunities where they have gone into trading zones, for example, and I explain a little bit, and maybe we draw some patterns as well. So this is what I want to share with you today on the practical side of it. On the theoretical side of it, I just want to give you some ideas of the Bretton Financial Trading Institute membership. And then when you join $10.99 per month, you get access to all the videos. There will be loads and loads of videos upcoming. I'll be putting in loads of videos, but they form a course, and this whole course is a prerequisite, your first level of entry, pre-entry kind of thing for the actual certification program at ATI. Okay, so now we are sort of collaborated with ATI. So my every move is sort of monitored because I have to submit all my methodology, how I teach people, what are the reaction, testimonial, and there is no theory anymore. So this is quite different from other trainers in brokers and all that. So I'm not associated in my style and method with other trainers. Other trainers in brokers, they are actually working for the brokers. And that basically means that even their strategies or whatever, if they carry the brand of the broker, they are paid salary by the broker. And that is basically more a marketing, PR, branding type role. So I don't play that kind of role. I am an actual trader myself, investor, as well as educator and researcher of the market. So I am a mentor to actually mentor people who wants to follow me. And that's basically what I do for many years now, 15 years already. So let's get going with the actual module of this whole webinar. So you will catch me again every Sunday in this webinar, and we will focus on oil and gas, commodities in general. Okay, now without further ado, I will just go onto the platform of trading. This is the bkfx.io. It's a Cypriot-owned brokerage. I basically joined them only because I knew the head of dealing and my friend who is the CEO and a few others who are involved as entrepreneurs into this company. And then I checked out the whole cash flow of them. But the most important thing is the withdrawals of profits and all that, whether or not they can actually cover. It's a small brokerage firm. It's not actually small, it's actually new, mainly because the whole group are not actually involved in Forex. So they came to me and to ask me whether or not this is something we can actually start together to actually accommodate high-end traders. So we've got high-end traders, very big traders who are trading in bkfx.io. So that's the reason why, because I've been hunting high and low for brokers when I was employed as well, and that didn't actually work out really well, because if I am an employee and then they want to actually take control of the whole scenario, it's very difficult for me to be on the side of the trader and protect the traders and then still be employed. So I'm no longer employed by any brokers. I'm actually just independent trader at the moment, running Bretton, especially running FX Academy as well, and also in collaboration with ATI at a very deeper level in terms of certification. So in this case, I see that with BKFX, for example, you've got all the trading instruments that is good for now, and I'm also looking at adding more precious metal, palladium, and various others. I think palladium we may have, but I want to guide you guys in understanding how to trade precious metal as a whole, but also how to strategically trade crude oil, especially US oil and Brent oil, and then understanding the impact. And when you understand the impact as well, then you will be commodities as a whole, and you'll be quite a good commodity trader, meaning trading gold, silver, or anything that actually comes in the way. So let me not delay it further. Now, number one, I want to share with you guys is that this week, I am looking at personally trading oil. Now, the reason for that is trading oil on the downside. I'm expecting oil to actually fall quite a lot. So we'll talk about oil first, and then we'll talk a little bit about gold and various other factors as well, okay, technically. But now I want to talk about what would actually be impacting oil's drop starting from next week. Now, I don't know whether you guys heard of it. Latest news is that we've got loads of news as of last week, 2 weeks ago, with Colombia. Protests in Colombia impacted price of commodity, especially copper, and then oil as well. Then we had the shutdown of the biggest pipeline in the US, Colonial Pipeline, because it was hacked, and all that kind of thing. Now, we've got one of the biggest news at this moment. Now, it has got to do with Iran. Okay, so the sanctions are expected to actually be lifted. The sanctions by Europe and US for the oil production will be lifted, but already has been preliminary lifted. Okay, so that is going to rise a lot of supply because they are going to begin production, and that will be coming from Europe and the US. So both Europe and US have lifted the sanction. This is going to be a very big, giant news in actually having oil prices to drop. So then we will also expect petrol prices to be cheaper for this time. We don't know until when, but this is talking about the whole trading week. So I want to actually talk about that. And then when I have news for you, like fundamental side of it, geopolitical side of it, I want you guys to be guided on how to combine that with technical. So we need fundamental and technical to actually join force to give you a clear picture on how to trade it. Okay, so this is basically what your Sunday's webinar will actually be about. So this is number one. The Iranian crude oil is back online. So that is basically meaning that sanctions are going to be lifted off. And then we also have the Iran nuclear deal. Now, the Iran nuclear deal, basically, it has already been approved, and that is also going ahead. So suddenly we have all this Iranian picture coming in, right? So this is going to be a huge impact on oil in general, especially WTI, US oil. Now there's a big difference actually between Brent and WTI. Now, Brent is a producer for sweet crude, we call it, right? Now, Brent is based in North Sea. North Sea area is in the UK, the North Sea Islands, right? The North Sea side of it. Now, that is the main producer for the entire of Europe. Okay, so where I was before staying in Aberdeen, Aberdeen in Scotland is your base for the Brent oil. So that is where you get all the BP, the Shell, the Talisman, Aker Caverna, all these huge producers and companies. They're all actually based in Aberdeen, in that one little city. So how Limassol is the house of 200 plus Forex brokers, in Aberdeen is the house of maybe hundreds of producers and oil and gas companies. So that is the we call it oil and gas kampong in Aberdeen. Here in Limassol is the Forex kampong here in Cyprus, in Limassol, Cyprus. Okay, so that's the difference. Now, so that is the biggest news that I feel we will need to take a look at the moment with that news and look at what is expectation of the fall from a technical perspective. Okay, so in other words, whatever that will happen fundamentally will literally fuel the whole drop of oil, and then we want to see that drop from a technical perspective so that it's clear. Basically, your technical perspective will be how much to trade, where to enter, all that thing, like the window to the market. That is the function of the technical analysis side of it. Okay, the function of the fundamental, the news, the geopolitics that goes on outside of the chart, it will act as the fuel, and also to solidify the trend. How long the trend will go on all depends on what goes on outside of the chart. And what goes on outside of the chart will fuel and push the prices that you see in the candles. Okay, so that candles, the mother candle, the body of the mother candle and all that will actually be fueled by what's going on outside of the chart. So there is no way to really just focus on technicals or focus on news when you are trading commodities, especially because they intertwine. You need one to trade the other. You need one to actually sort of confirm and clarify the other. So if you are actually just hearing the news and then without looking at the window of the market, it's impossible to actually see what exactly is going on from what is driven by the news and the geopolitical things that is happening outside of the chart. So it works together. It has to be a team. So because they work as a team, one is to show what is going on, one is to make it happen and make the trend happen. We need to apply both fundamental analysis and technical analysis. Fundamental analysis does include news, your understanding of geopolitics and everything else, which I will basically be in the middle of both fundamental and technical to guide you through on how to actually trade commodities as a whole. Okay, so that is basically it. So Iran basically will be producing much more oil. Now they have been producing only about 2.5, if sorry, they have only been producing about 1.5, if I'm not mistaken, or almost 2.5 million barrels per day. So they are going to increase that to 4 million barrels per day. All right, so we want to take a look at whether that impact will start to kick off from tomorrow or Tuesday or wherever, we don't know, or maybe from later tonight, we don't know that, but we know that the biasness would most probably be to the downside, not upside. So we want to look at that technically as well, especially on WTI or US oil first. Okay, Brent, we want to leave that aside a little bit. It might follow, but in a very low percentage, because Brent oil is mostly driven by what goes on with Brexit, Britain's economy and trade relationship with Europe in general, oil, or the European countries. These are the side of Brent. Brent is impacted like that, but WTI is impacted on the other side. Okay, it's impacted as a whole because US economy is considered to be number one in parallel with China's economy. So that is basically what happens on the generic terms. Give me a second. Okay. Yes, basically, this is what it means. They were banned, but now they are allowed again to sell. That is what the sanctions mean. The sanction meant that they were not allowed to sell. They're not allowed to do business with the oil. But even when they were not allowed to, they were selling it to Russia. People were buying it through Russia and then selling it to the Chinese. That kind of thing was going on. But right now, the sanction is going to be lifted. So that means they can sell again. Yeah, this is what basically it means. So it's going to be a very big impact. Because they can sell again, meaning that they can actually produce more oil. If they are going to come back into the picture to produce the oil, that means the supply is going to be a lot. If the supply is going to be a lot and the demand is going to be high, that means the price is going to drop. Okay, so the supply means the oil. It's like exactly like walking by the beach, right? When you walk by the beach, you see all the seashells are there, you see all the rocks, all the pebbles. That is why it's free, because it's just too much of it. So anything that is too much of it will actually drop in terms of price. And if the demand increases, because they are expecting demand to increase, that is why they want to lift the sanctions as well, so that all the OPEC, they can come back into the OPEC community again to produce all the oil, because they have done a forecast that is not enough oil with the demand that is going on. And because of the situation with COVID as well, jammed up activities, and then now the need for transporting the vaccines and a lot of other things as well. Shipping has to go on double, triple to pick up with the economy that has been stopped, or I would say reduced because of the COVID. They have to gear up, and because they have to gear up and push the economy so much, they have to also use a lot of energy. They have to use a lot of energy. Factories have to run, shipping have to run much more, logistics. So the use of oil is going to increase. So the demand is going to go up, and the supply is going to go down. So even though they are going to increase the production, the demand is going to keep picking up. So that basically means that supply is low, demand is high. And because of the sanction with Iran, that basically means that they're going to produce, because they've got one of the largest production, which was closed for almost 2 years or something like that. Now, because of the sanctions, it's going to be pumped up. They spend a lot of money onto that production plant as well, which is one of the most high-tech, biggest, and all that. And that is, done there. So a lot of other countries, including the US, including Europe, UK, and all that, they like to play politics. So they would love to make money from Iran's production as well. So of course they will lift the sanction, and then they also agreed to the Iran nuclear deal and everything else. So at the end of the day, unfortunately, it's very, very political. So it is the black blood that is running in the veins of the world. Actually, is oil. Okay, so that is basically the truth of the matter, and it's 80+% driven by geopolitics. Okay, so politics, economics, all that all mixed up to create a geopolitical factor. So once we see that this is driven, then it will impact all other commodities, including oil, including gold, including silver, and everything else will start to move. So this is probably one of the best timing. I would expect by the end of May, especially, and then the whole month of June, we will see a lot of volatility, a lot of liquidity, and it's probably one of the best timing to actually trade commodities, especially gold, oil, everything you just name it, it's going to fall. Most of it, including gold, sorry, not gold. Gold will actually most probably go up because of all these things will also stir some risk events as well. So people's fear will come in. So gold will act as safe havens, and then you will see US dollar will act as safe haven as well. So we don't know about the parity there, but they will take turns in going up and going down. So the volatility will actually be very, very interesting. That's why we need the technical side of it to plan where and the timing of entry and exit. So in this kind of trading in commodities, that's why I've explained it many times to traders as well, is that we cannot afford to trade at this time by leaving your trades open for commodities. You cannot do that. It's very, very risky. Even for myself, we have to trade intraday. We have to trade as short as possible to enter a zone. Okay. On oil and gold. Okay. Yes, it's a good question. What is the correlation between gold and oil? There is no exact correlation, okay, but one will impact the other because oil and gas, gold, silver, all the precious metal, they actually come into the same category of commodities. So if one actually moves and being stirred up by the economies of the country, they will start to move the other as well, okay? Because when something is stirred up in the economy, like geopolitics is impacting oil, there will always be the fear factor, and then in the investors will actually be worried. When they get worried and all that, then they will pump in the money into safe havens, especially gold. That is how the correlation happens. The correlation does not happen product to product, gold and oil, for example, but it actually is correlated from what is happening behind the movement. So what is correlating is actually the events that are correlated, not the products on its own. For example, gold's movement is mainly because of what happens in the United States. So whatever happens in the politics and economics of the United States, especially with inflation, the treasury yield, the 10-year treasury yield bond, whatever goes on in the United States, if it drives the dollar up, then it will drive the gold down. If it drives the dollar down, then it drives the gold up, like that. So it's actually the correlation has got to do with behind the curtains of the economics and geopolitics of the country. It will create a ripple effect. So it's not really too much correlation. It's more ripple effect. It's more cause and effect as opposed to correlation. And it's a big picture kind of thing. It's very complex, very dynamic. So I want to be the one helping, guiding you guys in understanding what impacts what, connect the dots, go onto the chart and find trading opportunities and trade it. But also you need to put on your risk appetite, stop loss, and all that. And not only aim on the profit side of it, aim on the timing to entry with reasonable risk, because anything can happen at any moment of time. So even though right now we have got strong news that will trigger the fall of oil prices down, still they are in control, not us. So we can only write the news. But then what if they just have an emergency meeting in the next hour and then change the whole course of whatever trend it is still possible. So that's why we want to trade in reasonable bite size. We don't want to leave any trade for the next week, especially even for myself, me personally, I'm trading in within the zone like this, and in small like we call it in Malaysia like cake lapis. We have like different levels, different stages of trading. You just want to ride along. Once the price has gone inside the zone, like inside the zone right now, oil is trading, for example, at 63.78. It's already inside the red zone. So my whole attention is to guide you and myself personally to trade on the downside, because it is in the red zone, but not to trade right now, not to actually click onto the sell button right now, but it's most probably going to be the sell button that we'll be clicking. But the question is when are you going to be clicking that sell button? So this is what I'm going to be guiding you. And then when you're going to exit, and then enter and exit. So that is similar to the whole trade plan on on gold, sorry. On gold, it was exactly the same plan. It has gone into the zone, the blue zone, and then we waited for weeks and weeks now, almost about a month, for it to actually reach the sixth TP. So we have already hit 1, 2, 3, 4, 5. 5 TPs has already been hit from the very beginning here, right? And then and this is also a pattern, but we didn't trade the pattern. We didn't trade based on the pattern. So I've done the research similar to oil. So I have timed the research to know that, okay, the time is coming for gold to enter the nice blue zone where we can just keep buying and buying and buying, right? Now, because you and me, we are small traders, meaning we are not trading in the millions, right? If you're trading in the millions, for example, we've got some clients, they've got 1 million, 2 million in the account. They want to trade gold only with 2 million minimum deposit, let's say, all right? We've got a few clients like that. Few of my traders that I'm guiding, they are trading exactly like that. So if you're trading like that, then you can afford to just enter at this price here, leave it, relax, do whatever, and then you don't need to monitor whatever. Even though it comes down and up, it will still sustain your losses, right? And then you just leave it, and they're still leaving it on and without even looking. Now you can afford to do that if you've got a couple of millions, okay, to do that, and you've got your risk appetite. But if we are trading like me, and we need to not actually really monitor it every single minute of the day, but we need to trade in stages. We need to enter, close, re-enter again, close, re-enter again. When it hits the TP, we re-enter again. And then we hit the next TP, we re-enter again. So we don't really put in all the pending orders for gold, especially, and also for oil. We just know that these are what we aim for, but we do one pending order at a time, okay? Or we do one trade at a time. If you are not doing pending order, you do trading now, you trade now, but don't do all the pending orders one by one, because it is very volatile and it's actually gold or oil or anything else, right? So we want to do one pending order at a time, and we plan, and that can actually be closed in a day or two, something like that, but not too long. Okay, so that's basically it. But you need to have stop losses as well, which is reasonably large, because we are in a high probable trading zone. Okay, so let me just answer the question there. Okay. Okay, now we've got a question with regards to trading. All right, good. So now this is very important as well. Whether you need to day trade, for me, intraday trade is actually going to be fitting all of you, especially if you are joining me on the commodities as well. If you are also going to be trading gold, oil as well, then I would suggest not to be a swing trader so much, because you guys are retail traders like me, and we need to be intraday traders to actually reduce our risk. So that actually means to open our trade, to aim very small. Let's say currencies, right? You want to aim at 20, 30 pips per time, especially when it enters a zone like this. So I will draw the blue zone or the red zone, and I will give you your TP prices and your entry prices. And if it is currencies and oil, we can adjust the entry price and exit price based on psychological numbers. Okay, so on all the others, we cannot really apply psychological numbers like gold and all that. So it needs to be your own risk appetite as well, to know how much SL you want to enter and all that. But I can give you your entries and exit price mainly based on either psychological numbers. If it's not applicable on psychological numbers, then it will be applicable on price action. I'll give you that. But SL, you guys have to decide your SL. Okay, the SL is your risk appetite, and it's actually your own to decide. Nobody should actually tell you your stop losses, because it is your personal decision of how much you are willing to lose in US dollars first. Okay, in US dollars, you need to have that in your mind. If you want to trade, let's say I give you an example, you want to trade intraday, right? It's got to do with your risk as well. If you want to trade short term, close the trade within a day, it's actually got to do with your risk. I'll give you an example. If you are trading currencies, let's say Euro USD, just as an example, and I have given you some guidance and share with you a signal for Euro USD on the buy, for example. And that buy trade signal has got my pattern on it. I've drawn a pattern and I've justified that, okay, this is a strong buy trend. It's got a buy geometric pattern. And then it's, from C to D, you can trade on the upside. Total is about 180 pips, but the 180 pips is based on a very big pattern in the daily chart, let's say. It doesn't mean that you can trade that daily chart, because the daily chart is not for smaller trader. Okay, number one. So what you have to do is that I will teach you basically the geometric pattern, but then I will also point out to you the whole blue zone. The blue zone, if the price is already in the blue zone, that means it's already in the buy zone. Okay, but you cannot leave your trade open to go and attack the 180 pips if your capital is small. If you don't have 5,000, 7,000, let's say 10,000 and all that, that means you want to trade on the smaller side and you want to trade little pips, take it in a day, a few trades in a day, and you want to close your trades in a day and have a nice target for the day, and you close and you don't trade anymore. And every day you do the same thing. That is for smaller traders, and you have to trade that way. So what you do is that if I give you a signal, big pattern, 180 pips potential on a daily chart, you have to break that 180 pips into 30 pips, 30 pips, 30 pips per time to reach the 180 pips. Okay, so what you do is you look at that nice picture, big picture on a daily chart. Let's say a geometric ABCD is on the daily chart. You need to go back and go down to a lower time frame that fits you, because you're the retail trader with a lower capital, right? And you want to build your capital up. You have to go to 15 minutes or 1 hour chart to look at whether or not in the 1 hour chart and the 30 minutes has the same geometric pattern ABCD, but smaller baby ones in the smaller pattern. So you cannot trade a mother or a father pattern with small capital. Small capital, you trade baby pattern from the big pattern. And if there is no pattern, then you come back to me and we talk about price action. How much can you trade? Is the market giving you 30 pips at least on the 1 hour chart? For example, if I see in a 1 hour chart, yes, you've got the 30 pips potential, then you take 30 pips per time. And then that means you close your trade, hit your TP, you take another 30 minutes, 30 pips, because you have 180 pips potential in total, but you need to take little bites from that 180 pips. Okay, so then you can actually make sure you close all your trades in a day, intraday. So if you are aiming smaller pips, you can definitely have all your trades closed, and you don't need to worry about your next day floating all the trades. You need to close it. Also, the other thing is to close your trades early. Cut your losses early. So, for example, if you are already aiming 30 pips, let's say 30 pips is your target, right? It's your TP. Now you need to understand that your stop loss is actually based on your take profit, right? Because if you are willing to make 30 pips, you cannot be willing to have your stop loss at 30 pips as well. It will definitely cut your hit your SL very easily. You need to double, at least you need to double the SL. Maybe are you willing to take 70 pips for a 30 pips profit. So if you are willing to take 70 pips, 70 pips needs to be your minimum risk. If not, it will hit your SL, right? So you have especially if it goes into a blue zone or a red zone, the high probability trade is there. So normally it doesn't really hit the SL very easily, but you need to put the SL at 70 pips. Let's say double, 60 pips or 70 pips, double at least your take profit. If your take profit as a small trader is 30 pips, so you are willing to risk 70 pips. Then you ask yourself, how much you are willing to risk in terms of your value per pip. You obviously cannot trade one lot, right? If you trade one lot, that means you are willing to risk, because you will be thinking, oh, if I trade one lot, I can make 300 US dollars. But you need to understand, you need to risk 700. Okay, are you willing to risk 700 for 300? So that would then help you understand that, no, I won't trade one pip at $10. I'll trade one pip, $1. So if I trade one pip, $1, that means for this trade, I will make $30 if it hits my TP, but if it hits my SL, I will lose $70. Now, $70 is still manageable, okay? But it does depend how much you have in your capital. Now, 1,000 to 2,000 to 3,000 US dollars would actually be nice enough capital there if you're trading currencies and you want to trade like this, short-term stuff like that. You can still build it up, because then we can, if anything goes wrong, if you hit, let's say, if you are risking $70, let's say, right, and you follow the signals and I guide you, and then you trade, because I always look at my way of guiding is that the performance accuracy is about 60 to 70%, which basically means that you can get up to four wrong. That means you can have one trade loss, second trade loss, third trade loss, fourth trade loss, let's say, right? But usually I won't let it be until like that. Maybe first trade, second trade, third trade, maybe loss. Then we already know what to do and how to actually cover that up. So if you maximum loses 4 trades and you risk 70, 7 times 4 is 210. So that means in total for the day, you have lost 210 US dollars. To lose $210, it's still able to pick up if you have a capital 2,000, 3,000, and I still know how to pick that one up. Okay, especially if you have stop losses. If you don't have stop losses, and then you lose more than that 210, let's say, if you're trading $1 per pip, let's say, and it's very difficult to cover it back. Okay, but if you lose up to 210, it's still able to, because that 210 is not from one trade, it's from various trades, right? Five times 5 trades, let's say. So that is basically how it basically works. Okay, you guys are clear so far with that side of the risk? I'll be guiding you on the risk side anyway, but it's a very good question from Mr. Palani on asking about how you should actually be trading in terms of the risk side of it. At this stage, I would advise trade small, especially currencies and gold and everything, but we take it in stages. Give you the entry and the exit. You really think about your SL side of it. The SL side of it, you have to think for yourself. All the traders have to think for yourself. Okay. Okay, that's basically it. Good. Okay, perfect. So let's get back a little bit. So this is basically what I have mentioned about Iranian oil, Iranian crude oil. So we are expecting a very big fall, progressive fall or very sharp fall. We don't know that yet, but a fall in general for oil, US oil especially. So we'll talk a little bit more about the US oil, and we want to plan the prices as well. Like I told you, all these little prices, and then we go on to gold as well, and maybe a few currencies as well, no problems. But I'll cover most of the other ones. We want to focus more on commodities for this webinar, because tomorrow on the Mondays one, I'll cover the generic, all the other currencies especially. Okay, so with regards to oil, with regards to gold, for example, gold is still looks like it has room to go up, mainly because of the treasury yield, inflation, and also Federal Reserve is tapering. So these are the fuel that would actually fuel gold's prices to actually go up. And oil prices to actually go down, mainly for other reasons. So now the other thing as well, this is really, really very important for you guys to know, is that the difference as well between your oil, between your US oil and the Brent oil. Brent is UK oil, okay? WTI, which is US oil, is the US side of it, right? It's very, very geopolitical connected. Also, the Brent oil is geopolitical, but the Brent oil is actually covering the African, the European, and the Middle East demand. Okay, so that is its functionality on the Brent oil side of it. So if something happens with their business partners in Europe, in Middle East, then it's going to be very, very big problems, okay, with the UK oil. Now, when it comes to Iran, China, and Iranian nuclear deal and sanctions and all that, that is going to be the geopolitical fuel for the US oil side of it. So different type of oil has got different factors, different countries are going to impact that. Okay, so now this time around, we are looking at US oil, WTI. Now, the other thing as well is very, very important. One of the factor as well that may be pulling down the price of oil is the stocks prices. Stocks prices are known to have dropped as of last week as well. So S&P 500 dropped, NASDAQ dropped, stocks also dropped. Now, within the stocks, NASDAQ, you've got 100 top stocks and all that, and then the US stocks, you've got all the top ones. You've got categories, right, of stocks. You've got technology stocks, you've got growth stocks, you've got all kind of stocks, pharmaceutical and everything else. Now, this is very, very important. Within the stock, the type of stocks, there is a stock called bellwether stocks. Okay, now bellwether stocks are the ones that are usually used to determine the whole economy of the country and could actually impact the price of oil collectively. Now, bellwether type stocks are stocks like mainly the blue chip bigger companies like Federal Express, Caterpillar, CAT, FedEx or Federal Express. The tick number is FDEX, for example, and then Caterpillar is CAT. Okay, so wait a second. Yes, it has some correlation. Eitayomo, there is a correlation between USD CAD. When we talk about USD CAD, we are actually talking about CAD, about Canada's correlation with the price of oil, because it's one of the biggest producers as well. So when the price of oil goes down, then the Canadian dollar goes down. If the Canadian dollar goes down, USD goes up. So the USD is up against the Canadian dollar. So you need to be selling, you need to be buying the USD to sell the CAD. Yeah. Yeah, not the USD. USD CAD as a pair will be on the upside. Okay. You need to click on the buy button so that you buy the USD and you sell the CAD. So the USD CAD will actually be going up, not going down. Okay, right, because the CAD is the one going down. Can you answer for me, please, Bubbles? Sorry about that. All right, so yeah, that's clear, yeah, for you guys. Okay, so the bellwether stocks, it's also very, very important. Then we have Federal Reserve, not Federal Reserve, sorry, FedEx, Federal Express, we've got Caterpillar, and we also have Alphabet. Alphabet is the mother company of Google. Okay, so that is on the technology side. Federal Express is mainly connected to all the deliveries and the big things. They are using Federal Express, sorry, FedEx, to also do all the shipment of blood, as well, pharmaceutical product and vaccines. So this is basically where business shipping as well is very big on the Federal Express. So FedEx is very big, CAT and Alphabet. So CAT, FedEx and Alphabet are the main indicators in the stock side. If they are all falling as well, then that actually is giving you a bit of indication of the economy as a whole is also going down. And if the economy as a whole going down, it has a correlation with the oil going down as well. Okay, so if we take a look here, so at the moment, it is still to the upside. It has got FedEx, for example, is here. But if I have looked, I've also looked at the candlesticks for FedEx, then I see that it's actually about to reverse as well. When I look at Alphabet as well, it's about to reverse. I look at Amazon, it's also about to reverse. So I can see that there is something big that might actually go on to actually just fall on a big scale. So on a big scale, those stocks would actually fall, and then we are going to be looking at a lot of movement in currencies, in gold as well. And when that fall has actually happened, that would give out some fear to the general public, and that fear will then motivate gold's prices to actually go up even more. Now, there is another thing that you guys need to also know, is that everything that we talk about is actually connected to one another, all the financial market, including Bitcoin, cryptocurrencies as well. So a lot of traders have actually talked about how Elon Musk has actually tweeted and it has dropped the price of Dogecoin, because he has also tweeted, Elon Musk has also tweeted about not wanting to use Bitcoin as well, or something like that. So then the Bitcoin prices also fell quite a lot. And this is basically what the general public or general traders can actually see, and they actually hear these things. But what is underlying is actually very, very different. There is always a bigger picture that has already marinated and going to happen and make that fall even worse, you see. So one of the biggest news is because of China. Now, what has actually motivated all the cryptocurrencies to drop 40%, 50%, Bitcoin's drop, almost everything has actually dropped, and we are expecting more drop, is because of the announcement from China last week that it has banned all cryptocurrency service providers. So all the payment transaction from overseas, they ban it. So you imagine all the businesses that rely on China as their client and then use that system to bridge the payment system of crypto to bridge to China, and China to other parts of the world, are all being banned. So then people's businesses that relies on payment using crypto has actually gone down, and a lot of the businesses are going to be bust as well. So this is basically one of the reasons to have driven the price of crypto to go down even more. Okay. Yes, Elon Musk can be not really the controller. The reason is that we need to understand what has happened last year. Last year, end of last year, Elon Musk has already been approved to actually run his biggest what do you call that, factory for the car, right? I forgot the name now. In China. So then he has already implanted his base in China as one of the biggest businesses there. Okay, so China and him could actually play a very, very nice game if they want to control the whole price of crypto, not only Dogecoin. So Dogecoin could actually be just the shadow of the whole impact. Okay, it's not the whole picture. The whole picture is very, very geopolitically driven. So we are expecting more fall of not only Dogecoin, but the geopolitical play will pull down the biggest one with the biggest market cap, which is Bitcoin. It has already pulled down Bitcoin. So Bitcoin is the central nervous system of all the cryptocurrencies, including alternate coins. Okay, so then if Bitcoin catches a cold, then all the other cryptocurrencies will sneeze naturally. So that is basically what is happening, and that is basically what is expected to happen much more from now on. Okay. Tesla, you are right. Yeah, that's it, Tesla. So yeah, so Tesla's factory plant and all that's all set up in China. So Elon Musk relationship with China is going to be quite good as well. I don't know how political it will be as well, but it's going on. So I think there is some kind of game plan as well. Just because Elon Musk is actually a very good authority in the market, people does listen to him. So it's already very contagious that people will react to whatever he tweets as well. Okay, there's a very intelligent guy. He's actually born with the genius capability as well. He's got a condition in his brain. I don't know the name of it, but he can absorb information a lot. That's why he can actually reach his level at a very, very young age. You know, a very scientific genius mind that he has. Also, with his condition that he has actually made his brain much more, I would say, a genius more than most people in the industry. So that is one of the reasons, because he's got loyal followers as well, because of just his brain and his contribution of research as well. You know, on space, on this, on that, on a lot of things. So a lot of authority has been given to him actually. So whatever he says will become very, very heavy. So that's why, but whether or not he'll be using it as a tool, as a game or anything like that, we don't know yet, but we need to expect the unexpected. Okay. Yeah, that's right. True. Okay. All right. So now what we can do is we'll focus for the next couple of minutes more to actually focus on the prices, on the things that we have talked about. Okay, especially gold and oil. So now we talk about the U.S. oil. I have actually drawn a zone for oil traders. U.S. oil we're talking about, right? So because I'm expecting, this is on the monthly chart, by the way, but I need to use the most data, and then I'll break it down to lower time frame. So here, for example, the price at the moment is under the 6480 psychological number as well. So that means the current price at this moment of time has entered the bearish zone. Okay, because it has entered the bearish zone, the ideal price of entry is 10 pips under the psychological level. The psychological level, now the current price is very close to the psychological level of 64.80. 0.80 is your psychological level. So if you want to sell, you cannot sell at 64.80. If you want to sell, you have to always sell under 64.80 by 10 points or $10, right? But this is oil we're talking about. So under 80, 80 minus 10 is 70. So your better price to sell is from 64.70 onwards, just so that it doesn't reverse too easily and just so that you are safer. Okay. So, but right now for oil, you are already inside the bearish zone. Okay. So I have seen the bearish zone that the US oil has entered since last week early, before the sanction nuclear and everything actually has come out, but technically it's already given you the possibility that it might fall. Okay, so if we look at to the left here, for example, inside this whole red zone, if you look to the left, you have got bearishness that has taken place in the past. You have big mother candle has taken place in the past as well, and then you see some more mother candles, some more mother candle. If you look at all the upward candle, you have some bullish candle, but then most of the price that gone up were made from smaller candles, not very, very big. So the fall were all very, very big. The fall actually started here. Now it has fallen from 107, 107, and then it dropped with very big, powerful mother candles, bearish mother candles, right down to the $21 price here. Then it went up, and now it's actually building up again, but now it is in the bearish zone. So we are only looking at selling opportunities, not buying opportunities, but we need the news and the backup from tomorrow to feed us that, then we enter. Okay, the psychological levels are 0, 0, 20, 50, and 80. Okay, another time 0, 20, 50, and 80. Now if we're looking at oil, we are looking at the psychological number after the decimal point. So the price is, let's say, 64.80. That is a psychological level. 64.00 psychological level. 64.20, 20 is that psychological number. Then 64.50, 50 is that psychological number. So you look at it like the USD pairs as well, and all other pairs that is with the Japanese yen, you have to look at it after the decimal point. Okay, the 2-digit after the decimal point. You can throw the last digit away. You just want the 2 digits after the decimal point to actually guide you on the psychological numbers. Okay, all right, so there you go. So now, for example, 64.70 will be a better price to sell for oil. Okay, now as 64.70 goes down, and let's say it goes down from 64.70 and you are selling and you're selling, you can sell it. And basically, I would think that it's probably best to exit, or your take profit should actually be as early as 53.30. Okay, so you have a signal here for the sell. 64.70, you sell. Okay, your take profit 53.3. Oh, give me a second. I think it's better, safer. 53.90. Okay, 53.90. So that is a very big space. Very nice. This is long term, by the way, right? So what we want to do is that we know that there may be a shortest term, not longer term, but shortest term actually, in a way that it can actually fall that much. It all depends on how much the news and the things will impact tomorrow onwards, because tomorrow, because it's the weekend now, right? So all the news will be marinated, waiting to burst, to break out tomorrow. So when that, because we have to talk about breakout news as well, not only breakout of price from a range, the news are accumulated because the market is closed. Then everybody will rush into the Forex shop, okay, into Forex trading Monday tomorrow. So how much news will come in the Asian session tomorrow, when you all wake up in Malaysia, for example, in Asia first, then you are ahead of me by about 5 hours or so. In that 5 hours, in the beginning of the session, we need to know what have actually happened. Okay, whether or not it was positive news, with oil and things like that. That is what's going to happen to actually push the price down or up for us, especially for oil. So this is basically it. And because we are actually trading US oil, oil versus the dollar. So it has a lot to do with the US session as well. So when US sessions start coming in, London sessions start coming in, then the activity for oil as well will actually increase. Um, 54.70 is your selling price. 64, not 54. 64.70, because here, for example, we are in the red zone. Now the price is very close to 64.80. 64.80 is your borderline. See this yellow line at the top of the red box is 64.80 already. Now the price closed as of Friday just under 64.80, but you need to only sell at 64.70 because 80 is your psychological number. So you need to minus 10. 80 minus 10 is 70. So 64.70 is your selling price. 64.70 selling price. Okay. Then your buying price, your take profit, as it falls, 64.70 falls. Okay, you have a room for it basically to fall 53.90. I want it to be safer. 53.90 is your take profit. 53.90 is your take profit. 5390. 53.90 is your TP. Okay. All right. So that is just the space that we look at. But when this is very important for you to understand, okay, all of you need to understand, even though I give you the price of the TP, does not mean that you can actually leave your price open and just enjoy. You need to also understand it does depend on what happens tomorrow. That 53.90 that I given you has to be increased or changed accordingly tomorrow. Maybe we take profit earlier tomorrow. Okay, so that is what we have to monitor only after the price open tomorrow. Okay, and please have stop losses. Now, I will give you a little bit of an idea of how you do your stop loss easy. Okay, so now, for example, I give you an idea. If for example, let's say, just as an example, if you are buying, okay, let's use the real example, USOIL. Let's say your take profit is 53.90, right? So now I will color. This is just a generic idea of how much it can fall for the shortest term, okay? And it's not set in stone, but this is your TP. I will put it here, okay? So your TP is 53.90. Yeah, 53.90. Okay, let's follow the purple line. Okay, so 53.90, 5390 is your TP. Okay, there you see the purple line there. Now I will put the green line as your sell price. That was 64.70. Okay, 64.70. And we will change that to the green color, right? Okay. So you see, you've got 64.70 green color price here is your sell, and take profit is 53.90. Now, for those who wants to know the easiest way that you can actually adjust and know roughly your what do you call that, stop loss is usually double the take profit, right? Double, at least double or more than double. So all you need to do is you can take this trend line, okay, and I will put it here, the distance here, right? Okay. Now this is the distance, right? I will put two lines here. Okay, so now I double click and put it up. Okay, double click this again and put it up. So that's double the distance. So your stop loss is here, double. Okay, so that is your stop loss. So your stop loss 86.80, let's say. Take profit 64, your entry 64.70, 64.70 your entry. Take profit 53.90. Your stop loss, double that, double. You want to go up a little bit more, entirely up to you. Okay. For here, if you look at the candle as well, okay, this is not too bad. You can actually leave it like that, double. But double should actually be your minimum stop loss, because you don't want to be, see, there's a resistance here as well, right? So that is not too bad. That is your double is your stop loss. So this is the easiest way. And so you know now 86.80 is your stop loss, 64.70. And you do the same for gold, you do the same for anything. With currencies, it's easier because then you know the calculation of your pips and stuff like that, right? But then for those who, you know, trading gold, oil, you need to know you need your stop loss at least double of your take profit, because if not, your stop loss is going to be hit very easily. Is that clear? You guys okay now? Yeah. All right, good. So just use this kind of drawing for your stop loss. Okay. Perfect. Okay, good. All right, guys. So this is for oil, but we are going to update you tomorrow on the Monday's webinar for Bretton. We will then see how the price goes, and then I will be able to adjust your TP for you and tell you, okay, guys, you know, you've done your pending order 64.70. Let's say you do your pending order, or you've not done your pending order, and then you want to wait until tomorrow, Monday, when we do our webinar. Then we plan our entry price and take profit price together. I would prefer that to actually plan tomorrow. Don't do any pending order too rushed when you wake up in the morning tomorrow, because it's not necessary to do a rushed up pending order. It's probably better to ride along the market, because we will have a lot of opportunities. So don't have the fear of missing out. We call it FOMO, F-O-M-O. Don't have that fear. If you have that fear, what happens is that fear will drive greed when the time is good. Then when the time is good, you will be greedier and greedier. And what will happen then is that the fear of missing out will always be there. And then it will come in and then tell you in your mind that you need to actually trade more and quickly enter, and maybe not have stop loss as well. So we don't want to do that. So to prevent that kind of psychology, we call it hantu in trading, is the hantu actually can actually go away from the beginning, not at the moment. So that actually means is that we need to curb that. Prevention is better than cure. Okay, not cure, not damage control all the time. So we need to prevent that mentality from the very beginning. How you prevent that mentality is actually to ride along the time and to wait a little bit. And because I'm waiting myself, I am a very patient trader, very successful trader. I've made a lot of successful traders, but the way I have learned it was not from the beginning. At the beginning, I've been greedy, I've been fearful, I've done a lot of mistakes, lost a lot of money. But then for me to maintain the steadiness and also to guide the steadiness of other traders is actually to ride along the time that we have high probability trade. At the moment, we have only a kind of signal of the trend. The trend may be to the downside, but whether it will really happen or not can actually be seen only when market opens tomorrow. So why not wait until tomorrow's session and we can plan all the trades together? Okay, but this is just a generic idea. The fuel will actually be the Iranian crude oil production that come in, the sanctions relief and all that. That's the fuel that potentially is there to drive the price of oil down. But We are waiting now for the timing of that. So the timing is not happening yet. It's very bad timing to even just trade tomorrow in the morning straight away when you see the candle fall. Not yet. Maybe better to wait until the session tomorrow, and then we can trade together. Okay. It is buy session for some time, yes, and usually it happens like that when it comes to April time, May. But then now it is usually this time that the price will still go up until June time. But now the situation has changed because of the decision to actually relieve the sanctions of Iran. So the game plan, the normal game plan, has actually changed. So we are expecting a reversal at this time, not a continuation of the uptrend for oil, US oil. Is that clear? Yeah, all good. So that's basically it on oil. I think we are in a good place to sit and wait until tomorrow because of the zones that I have taken time to actually research and analyze the zones already. Okay, so that is for oil. Any questions on oil before we go to gold very quickly? Before we end the session as well, because gold, we will be covering a lot on gold, oil, as well as all the currencies to trade in tomorrow's session. And tomorrow's session starts at 9 as well, my time. Okay. Okay, questions, guys. Any questions on oil at this moment of time? You guys are clear? All good? I think we can move to gold. Now, gold, we are trading at 1881.28, meaning that closed at 1881.28 as of Friday, price-wise. It has actually gone as far up as 1889.83. So that basically means it has actually hit the 1879.87 TP, which is the fifth TP. So 1, 2, 3, 4, 5. 5 TPs has already been hit. We are waiting at the moment to actually go up more, driven much higher to hit 1897. 0.32. So 1897 could actually be the target price TP. Don't need to take 1897.32, maybe 1897 only, 0.00. Okay, because we haven't actually really measured gold's prices based on psychological numbers. It's actually more tricky. So I have not devised any psychological numbers yet. I'm in the midst of researching to look at whether or not we can enter and exit based on psychological numbers, but it takes a little bit more time, I think, on gold. So we need to wait on that. But then oil, you can adjust based on psychological numbers. Yes, of course. So on the price trade plan, now, whatever that you see that I am sharing with you is mostly bits and pieces of strategies, like the geometric patterns, a little bit on the psychological numbers. We combine psychological numbers, and then we combine looking to the left. There are various other things on the technical side of it that basically they are only ingredients, little bits and pieces of the actual price trade plan. The price trade plan on its own is actually very, very different. It is the whole strategy, basically. And let me see whether I have an image here. So I will share with you on the difference between the price trade plan is the whole guidance on how to go step by step to do the whole research. And then you find the pair, and then you do technical analysis, and then you trade the pair. Okay, that is all the price trade plan. The little ingredients are only to help you at the moment, like geometric patterns, and then I give you some guidance on a couple of other things, and these are all just fragmented little ingredients. Okay, so what will happen is that in the Bretton Institute website, when you become a member for only $10.99, you will get to attend my webinars like now, and also more webinars on specific topics as well. And I will have a lot of videos. Basically, the whole course will be on geometric pattern basics, how you draw the pattern, how you trade it, high probability pattern, some extra videos on what are psychological numbers and all that, so that traders can actually refer to all these videos. All these videos are going to be prerequisite for the certification, but it is only going to be geometric patterns videos and some basics and some special elements videos right there. So if you ask me on psychological numbers, I can produce a psychological numbers one, and I can put it there in Bretton. And if something is not clear on Fibonacci tool, I can make a short video, explain everything, so you guys can refer there. So that kind of things we can keep upgrading and putting it there. Now, when it comes to the certification, that will then cover certification of the geometric trading method, which basically is the whole step-by-step of what I actually do from start to finish to start to trade, which is basically a trade plan that I have created myself. Okay, so that is the difference. Everybody is having me as their mentor as of now. So basically, yes, I am already your mentor, Tomo. Okay, so when you actually come into the webinars and all that and ask me, and basically if you want to be a member as well of Bretton, once it's launched, I would think by next week, then you can actually subscribe as a member for a very special fee of only $10.99. Okay, so the $10.99 includes a course and a lot of things actually, and you can actually invest. So your investment into me is only $10.99 per month, and that is basically it. And then we can take it further to certification courses and stuff like that. So yes, I'm already your mentor. I'm a mentor for all of you here that are hearing me right now. Okay, so you can also join the GTI group, this group here. This is the GTI group. I can send you guys the link as well. Mr. Kunan, maybe you can send the link in the group, and you can join us there. You could also go on to our YouTube channel, Bretton Financial Trading Academy YouTube channel, as well as a Facebook group. You can communicate with us there. You can communicate with us on the Telegram group as well. So there are various channels, and feel free to do that. Okay, all good? Brilliant. So yeah, the price trade plan, will go into it deeper, but then this is just a rough idea. The P part, the psychology of the market, how you pick the pair, how you look at heat maps and various other things. Step 2 is to guide you to calculate your pips, your lot sizing, how much is it good for you, and you can have that personal talk with me as well, and so that I can help you to understand your goals per day, and also adjust your lots per size, your pips, your dollar per pip and stuff like that. And the I part is basically you guys connecting to me so that I can feedback your trades, feedback all the insiders information, news, and various other things like I've done now with the Iranian oil, guiding you to trade oil and stuff like that. And then we confirm all the steps, and then only then we execute the trade or not execute the trade. Okay. Brilliant. Thank you, Mr. Kunan, for the link. Okay. Good. I think, yeah, I think that's basically it that I've got for you guys, because we will be covering much more tomorrow. So do register as well. If you can go on to Bretton.institute website under the webinar section, you could easily find all the, let me just go there. Under webinar, you can actually click on there and register for the Mondays, the Wednesdays, and the Fridays webinar as well. Okay. Yes, we'll have it every Sunday from now for the commodity special, 9 a.m. my time, 2 p.m. Malaysian time, and yeah, 9 a.m. my time, Cyprus time. We'll have every Sunday, yes, but Sunday is specifically for this, for the commodity side of it. We'll talk about news and things that will fuel what is the direction for oil, if it's gas, good to trade, gold, copper, if it's good to trade. So I'll point out what we're expecting, but we'll cover that on the Monday's webinar tomorrow, and we will take it from there. All right. So all good for you guys? Everything okay? Shall we end the session for today? It's gone on for some time already, almost 2 hours. So yeah, so this is what any questions, guys? That's right. Any questions? Mr. Kunan, maybe you want to guide Eita Yomo? We'll check on that and we'll get back to you. Perhaps Eita Yomo, you want to put your email address here, or even register yourself, free registration on the Bretton Institute, so that we get your details and we'll be able to guide you through. Okay, no problems. Mr. Kunan will guide you through on that Eita Yomo, on the link. Okay, or what we can do as well, give me a second, let me see. I can send you tomorrow's link here, just so that you don't miss out. Oops. There we go. So this is for tomorrow's link, and yeah, Mr. Kunan will sort that one out. I think on the website should be okay. All right, this is tomorrow's link on Monday, 9 a.m. my time. I think Nigeria will be 8 a.m. if I'm not mistaken. Okay. All right, guys, I think that's it I've got for you guys, and we will catch up again tomorrow for specific pairs, and we will look into the take profit, the entries and take profits and everything. By tomorrow, we should be able to see oil's movements as well, and we'll see what happens tomorrow as well, and various other trades for tomorrow. All good, guys? So shall we end the session for today? And thank you, guys. Thank you all for joining me today. And we will be looking forward in you guys joining me again tomorrow in tomorrow's session. All good, guys? Yeah. All right. Brilliant. Good. Thank you, guys. Thank you very much. Enjoy the rest of your Sunday. Okay. Blessed Sunday to all, and have a good rest, and see you guys all tomorrow. Take care. Have a great Sunday too, Alfred. Thank you. Thank you, guys. Thank you all. Bye-bye for now, and we'll see you guys very soon. Ciao. Bye-bye.